Hey guys, welcome back to another video, and today I'm here to talk about one stock in particular that I think has the chance to change early buyers' lives. I think that this company, if you saw the title of the video, you know what this company is, but I'm going to go into depth on why this stock is so great and why it's the perfect, possibly the only time to buy this stock right now. So let's get right into it. If you guys do enjoy this video or these kinds of videos, be sure to smash that like button, also subscribe to the channel. Really appreciate the support. We're nearing 1,500 subscribers. Thank you guys so much. Let's get right into it. The stock we're here to talk about, it's no surprise, is SoFi stock, reaching another all-time high today at $32.45. We see the 52-week high is what it's reached here today. SoFi stock is a very impressive stock. We see if we go to year to date, this stock is up 116%. The past 5 years, it's up 194%. Funny enough, that's all time as well. It has only been a stock for less than 5 years. So SoFi is a very young company. It's one that has not been around for a very long time. Their market cap is almost 40 billion now. It's very crazy how that changed. But if we go to Market Dash right here, if you guys do like this site, Market Dash, I use it in literally every video. I really like their metrics. They use a lot of things that a lot of sites, like, you can't get this, just for free. So if you guys do enjoy it, be sure to click my 7-day free trial down below. It'll give you 7 days, no obligation to you, for free. Really great site. I love to use it. So it gives a lot of information. Like, for example, I can go down here and I can look at who's invested in it very easily. We see that a lot of big institutions do hold SoFi, but not a lot of SoFi. So, that's not really a telltale sign right there. We see some price targets from analysts right here. We see the low price target is 44% lower than what it is right here, but the higher price target, we still have, about 18% to go. So not really worried about that. And then we go down to financials. This is my favorite part. We see the revenue right here is growing very steadily. The revenue is one of the most impressive things about SoFi, is how they've been able to grow their revenue so, linearly. It's just obviously we see from right here, it's exploding. Revenue looks really good. And then if we go all the way over to this is the reason you should buy SoFi. I'm going to get into the investor presentation in 1 second and go over their financials. But this is the reason you should buy SoFi. Is look at, I just looked it up on Google. It's a pretty easy, question with a pretty easy answer. How many banks are closing this year? TD Bank announced they're closing 51 more branches, with 38 having already closed. So they're closing almost 90 branches here, and then an additional 12 are scheduled to close 2026. So within a year, they're closing over 100 branches, over 100. Bank of America will close 27 locations in 2025. JP Morgan is closing 15, Wells Fargo is closing 49, US Bank is closing 40, and Flagstar is closing 52. That's a lot of locations for all these places. 40 or 50 locations. You think about some restaurants that are doing well, they don't even have 40 or 50 locations. These banks are closing all of them. So that makes you wonder, is the bank space just dying? Is there no reason to invest in banks anymore? That's where SoFi comes along. Young little SoFi, this company that hasn't been around for a long time, they have 0 branches. SoFi does not have physical branches for customers to visit. SoFi does not have. It is an online-only bank, however. It has multiple corporate offices, which I'm not worried about at all. And their ATMs, which through Allpoint Network, they have over 55,000 locations worldwide. So that's the important part. A lot of people say, oh, SoFi has no locations. Where are the ATMs? How can I use the ATMs? They have over 55,000 locations worldwide. That is more than enough. So, it just comes down to these banks are going down and SoFi's going up. These banks are finding it harder to survive. A lot of people, a lot of the older customer base, which is who uses these banks, they're going into the bank, and that's fine, but a lot of younger customers aren't, and that's what SoFi's customer base is. That's the only customers they've ever attracted, because they've never had physical locations, so they don't even need to deal with that headwind. For example, we can look at market caps actually. So we see the enterprise value actually for SoFi we have right here is around 40 billion. If we look at something like Wells Fargo, let's look at that. We see Wells Fargo is almost, it's 510 billion. And then if we look at something like maybe Chase, JP Morgan, let's check that out and see what that is around, because you have 500 billion for Wells Fargo. And then this one is it's 1.6 trillion. So these are very high, valued banks. And then we go to SoFi, it's literally 40 billion. So SoFi has a lot of room to go. It's not up there with the big dogs yet, but I think it's going to be. So we go into their investor presentation. SoFi, honestly, I think is the best stock you can buy in the stock market. That's really it. I really do think that. I honestly believe that. Because I mean, just the growth on this one is insane. Like you never get an opportunity like this. Honestly, we see the members compounding annual growth rate of 50% on new members. That's insane. I can't name another company that has a compounding annual growth rate of that in any stat that's consistently been doing that for the past 5 years. Very impressive by SoFi there. And then even products, I'm not as worried about that, but that's still very impressive. They have durable growth. So a lot of these companies will grow by, 50% for a quarter, and then the next quarter they'll grow by 10%, and the next quarter they'll lose money. SoFi is growing very, very linearly. I mean, they're going up, just about a line. You can draw a line right here of how SoFi is going up. It might even be exponential. I mean, this line is, compounding annually. So we see that their adjusted net revenue is up a lot. This is their adjusted EBITDA is up a lot. Their adjusted net income is positive for the second year in a row. That is why the stock was so cheap in 2023. We saw that the stock price actually took a massive hit. If we look at April 2023, the stock was trading for in the $4 range. Now it's over 30. So if you guys did buy it for that, consider yourself very lucky. Consider yourself, you made a great pick. If we go down here, this is what I love to see as well, is they have diversified revenue. Really love to see that with SoFi, because if they didn't have that, I'd feel a little bit worried about them. But their fee-based revenue going up also makes me happy, because that shows that there's a lot of reoccurring revenue coming into this bank. Fees are not something that just gets waived in like a week. These are people that are in debt. I mean, it's not good for the people, but it is good for the bank. So they are paying the bank a lot of money, and probably for a long time the bank is going to be getting a lot of money from them. So that is a good thing for the bank's financials, that the fee-based revenue is going up. Love to see that. Also, long-term approach, SoFi is looking to preserve this growth. I really like that. Some scummy stocks will just, take this growth and then run with it, and then kind of sell all their stock. The CEO will, dump out, and they're like, oh, we know that we're not going to be able to keep this up. But SoFi seems like they're here for the long haul, especially looking at their numbers. They're focusing more on future growth, which I love to see. I mean, that's what a good company should do. SoFi being a good company seems to be doing that, so far. So I feel good about that. Their capital ratios, I love to see this as well. I mean, that's not, as serious of a metric, but, it's always doesn't hurt. Adjusted net revenue. Their guidance is up on pretty much all of these, which is great to see. Their tangible book value, especially, it's almost, almost double, not quite, but almost. And then we see that their net income is up 13%. They're expected with, they thought at the beginning of the year they thought at the beginning of the year it was going to be up 11%. Now it's up 13. Now then they thought 28, now it's 29, and they thought 30, now it's 36. So I really love to see that they're, beating their expectations, which when your expectations are that high, it's pretty hard to beat them, especially by 6% on adjusted net revenue. That's great. That's really great. These are just kind of some of the same numbers again, so I'm not going to go too into depth on SoFi, in that regard. If you guys do want to check this out, it literally is just the Q3 investor presentation. They do a great job at creating these slideshows. I think, SoFi is one of those companies that makes one of the better slideshows. There are some kind of surprisingly, the bigger companies don't make very good slideshows, like Amazon and Google. They make informative slideshows, but they're not as good as this one. And then Cheesecake Factory, another stock I talk about a lot, makes a very nice slideshow, very easy to follow one. Elf as well, they really go all out on those slideshows, so I love to see that. But yeah, I mean, SoFi is a great buy right now. Like I said, they're very comparable to these other big banks, but they're just a fraction of the size. And this is also a stock that is loved to trade. It's traded a lot among retail investors. That is, no question there. But I mean, look at their earnings. This is literally, they're beating every earnings by a lot, and then they're doing it every single quarter, and they're expected to grow this much more next quarter. I mean, it's just pretty insane. I mean, look at this research report. I mean, I think SoFi's growth is durable. That's what people are failing to realize, is that these fees that they're making most of their money on, they're not just going to go away. If you have fees on your credit card, you're in debt, which I hope you're not. I really hope you're not. If you're watching this video, being in debt is probably one of the worst things that could be, on your mental health, on, your family, on anything really. So I really hope that you're not. But let's say you are, SoFi's making a lot of money off of that, and they're making that money consistently. I mean, you take out a loan with them, that's good debt. You take out a mortgage or something, but they're making that money. That's reoccurring revenue every single month, and they make that their, mainstream of revenue. And all these people are taking out 30-year mortgages, and then they're extending them by 30 more years. I mean, there's a lot of things that, SoFi's going to be getting paid. They're going to be making this money month over month, and it's just going to keep growing over and over again. So that's why I feel very good about SoFi right here. I think that, even though the stock is at an all-time high, we can go look at another stock. Like let's literally compare it to Wells Fargo, which hasn't grown in a while, let's be honest. But I mean, look at Wells Fargo's stock. If you didn't invest in it, I mean, I guess they're growing good this year. But look at it right here. If you bought it, so you said, okay, I'm not going to buy Wells Fargo. It's at 65. This is their all-time high. They went from 65 to 86 just like that. So SoFi definitely has the potential to do that as well. If we look at one of a higher growth stock, one that I'd compare a stock like SoFi to, we look at Google. Let's look at the past all time on this one. So if we say Google was at an all time high right here at $204, you didn't buy it. You could have gotten it for 154, but you probably didn't. You say, oh, Google's going to drop some more, and then it went to 212 again. You're like, okay, I'm going to wait for Google to drop. Now it's almost a $300 stock. You missed out on 50% of gains just because you wanted to wait for Google to drop. So, I mean, SoFi is one of those stocks where I think you're going to miss out if you don't get in. And you can always dollar cost average down, but it's at this all-time high right now, and it's probably going to keep making more all-time highs. I wouldn't be surprised if SoFi kind of had a Palantir situation going on. Their numbers are really just that good, and I think that they could continue to grow like that for a while. And there's a lot of, new drivers of growth coming into SoFi. As I'm speaking right now, there's new things that are coming into SoFi that are making them a lot of money. So I really do like SoFi stock. I think there's a lot of great things that could happen with this company. A lot of things that aren't even unveiled yet, and their earnings just seem to keep beating more and more and more. So I feel very good about that. That's pretty much all I have for today's video, guys. I just want to talk about how great SoFi was, kind of go over their company a little bit, give a little bit of an analysis on why I think they're destined to make money. I mean, they're not closing locations and firing people and laying people off. They're not paying for the overhead of these leases. They're not paying for the overhead of these employees. They're just doing what's necessary to get by, and that is looking very nice on their financial sheet with their margins, for example. I mean, let's just look at that one more time. Their margins are 82%. I don't have words for that. You have quite the competitive advantage so far. You are doing pretty good. So that's all I have for today's video, guys. If you did enjoy, be sure to smash that like button. It helps me out a lot. I really appreciate the support to the channel. Also subscribe. Really appreciate that as well. We're nearing 1,500 subscribers. Thank you guys so much for watching. I'll catch you in the next video. Peace.